Hi, everyone, and welcome to this first webcast from the Canaree team. I am Sara, and I'm the CEO of Canaree. I'm here with Andre, who's one of the original co-founders of Canaree. Today, we're going to talk about the background for why Canaree was started, but also give some insights into financial modeling and how you go about doing that. Hi, Andre. How are you?
Hi, Sarah. I'm well. How are you? How are you holding up?
Good, thanks. Good, thanks. I'm live from my kitchen.
Okay, great. I'm live from the den. All right.
Yes. You usually have your two boys running around. Have you stuffed
They'll,
them away
they'll they'll
somewhere?
appear. They'll appear. They don't operate by any schedule, so they're just gonna. I apologize in advance. Yeah.
That's okay. Is he wearing clothes today at least?
Oh yeah, I forgot to mention that. Okay.
No, but thank you so much for taking the time to have this conversation with you today. I wanted to have this conversation mainly because one, we launched Canary last week, which is I think a huge achievement for a team during lockdown and a pandemic and an economic crisis to reach that milestone. Um, but also, obviously, we've been working together since I joined a little over 6 months ago um, to build our model, and I wanted to sort of share those kind of insights with the listeners or the viewers today.
Right.
Could you perhaps start by talking about who you are and why Canary was even started originally?
So I started in finance a long time ago. Don't want to admit how long ago, but a long time ago. And I've done a lot of financial models. So I worked in investment management, in infrastructure development, in corporate finance, and all of those different facets of finance need different types of models. But there's a fundamental type of model, which is building a model to model out a business plan. And when I started doing a bit of mentoring for some startups at InsurTech at Startup Bootcamp, and there were about 20 startups there. And at the end of it, most of them said, "Oh, could you do our modeling for us?" I went, well, we usually do that for large businesses, and it's quite expensive, and it's theoretically it's time consuming. So I went away and I started thinking, well, what could we do? What could we automate? What's the automatable in financial modeling? And that's where the idea for Canary came from.
Okay. And then what was the first step in starting up Canary? What did you do?
What did I do? I worked in Excel. I built a model in Excel to plan out whether, firstly, it was realistic. I did things like lean canvas, and I went around and interviewed people to see if this is something that, whether this is a pain point. And what it is actually a pain point. Not surprisingly, most people don't like doing financial models, don't know how to do them properly, don't have the time to do them, don't really care about them. But in actual fact, they're important. Every investor that you see is going to expect a financial model, and if you can't, I mean, the way I see a financial model is it's like when you write an outline for a story. You sketch out all the different points, and that means that you can clearly articulate why it is that you're doing certain things, or you think you're going to make a certain amount of money in a certain time. And that's one of the key questions that an investor is going to ask you.
Yeah. And of course, Canary will have, right now the beta is, build your financial model in just a few clicks. I've been continuously testing it, and I think you can do a basic financial model in less than a minute, which is, much faster than what you can do in Excel, even if you download a template. And then obviously we add on advice on top of it, so we can go in and analyze the numbers. So we're hoping that will be really helpful for a lot of the founders out there who are, as you say, and I've been one of these, just pulling out my hair because I just, my head hurts whenever I open an Excel spreadsheet. I'm getting better at it. But obviously, we've learned quite a lot from working together, and especially on the financial modeling side. One of the key advice that you've given me, and I've heard this in a lot of conversations we've had with founders, is this insecurity about not having the right numbers, or that 3 months down the line the numbers won't be correct. What would you say to those founders having that insecurity?
There's a famous line. I think Warren Buffett said it, but I think it's John Maynard Keynes said it originally. So it's better to be approximately right than precisely wrong, right? So you want to build a model that that has a few key assumptions that you can explain, right? Or that at that point in time you can explain why you believe that that's the case. It may change in three to 6 months' time. In fact, it's definitely going to change in 3 to 6 months' time. But the point is that you can have a discussion around why those numbers are the way they are at that point. Approximately right, right? You can never be completely right in financial modeling. There's no point even saying. And in fact, I mean, so when you go to more advanced types of modeling, you do things like Monte Carlo simulations, where for every single assumption that you make, you build like a distribution of what could actually happen around that assumption. So if I think my growth rate is going to be 5%, well, it could be 7, it could be 2. So you build a distribution around that, and then you can make an even more complex model. But you don't even need to do that. It's not essential.
Yeah, no, that's really good, and it's something we have in the pipeline for Canaree as well, and about doing Monte Carlo, but also just the ability to play around with your numbers and sort of share those assumptions as well. So to have a conversation around it.
That's so powerful. I mean, the whole concept of like a playground, and I know you guys have this in the backlog. So, like a playground or a goal seek or whatever, where you can say, okay, I'm going to target doing better at this one particular aspect of my business, and then you can see how that trickles down throughout your entire financial model. It's a powerful thing.
Yeah. And so I think I said this too in a board conversation, that I feel blessed to have, for finance guys helping me build my model.
People who can say they're blessed to have finance guys in their life. Okay.
Yeah, maybe that was an ego boost. But no, I have learned a lot, and obviously there's a lot of people contacting you guys, but why might it be a good idea to get help building your model, or why wouldn't it be a good idea? What are the pros and cons of getting someone to help build your model?
Well, I mean, the way I look at it is you need to be fundamentally involved in the construction of your model, right? Because that is what everyone's going to interrogate you on, whether it's investors, whether it's board members or whatever, even potential partners. You need to understand the drivers of your model. So even if you get someone to work on it with you, you need to be involved in it so that you understand. It's not a matter of going to a meeting, in a few weeks down the line and then swatting up the night before on the drivers of the model. You need to understand it inside and out, right? So, but then when you look at something like Canaree, that's the type of modeling that I like. So Canaree holds your hand as you go through it, and so explains bits if you don't understand it, but you are involved in the process of creating your model. So it'll help you when you're in those investor meetings or in the partner pitches.
Yeah, I would say one of the things I learned about building the financial model is not necessarily the numbers, as you say before, but it's a conversation you have that we've had, and then being challenged by the other members of the team or the board, or even potential investors that we met. I think if it's possible for anyone to have that conversation with a co-founder or a board member, that's really valuable. And we're trying to build some of that into the product, asking you the right questions and things like that. But I think that's really valuable to have that conversation and challenge yourself as well.
Yeah, one of the original things in Canaree was, you look at Excel, you start building a model. I don't know what assumption's correct for my sector. I mean, I've got no idea how much does a front-end developer cost in London, all those sorts of questions. And Canaree will give you benchmarks. I mean, that's it's so useful and really does speed up the process, and it also helps you justify the assumptions that you go on to make in investor meetings. So you can say, this is the average for this particular sector, and that's why we've assumed that. I mean, that's pretty convincing.
Yeah, it is. And speaking of benchmarks, so one of the things that we hear from the users on board now are saying, unit economics, everyone is asking me about it. I didn't learn this in business school. Why are they so important? And maybe are they just briefly as well? Could you dive into that a little bit?
Yeah, unit economics, I mean, it's pretty cool. I mean, it effectively VCs created, or venture capitalists created unit economics back in the 90s because they wanted to evaluate businesses that weren't profitable. You know, it's, like I say, it's easy, but it's relatively easy if there's like a Microsoft or whatever, you analyze the cash flows, you can come up with a valuation of the business. But what happens if the business is losing money, right? So unit economics, it just divides the business up into units fundamentally. So the unit could be different for different businesses. So for airlines, it could be seats sold or kilometers flown. For SaaS businesses, customers, right? So you then effectively subdivide your profit and loss statement into customer acquisition costs, which is all the sales and marketing that goes into acquiring a customer. So you know how much you have to spend to get a customer. And then also the revenue over the lifetime of having a customer, which is the lifetime value. And then the great thing about unit economics is you can compare the two numbers, right? So if you've got a failing business model, your cost of acquiring a customer is always going to be higher than the revenue you get from that customer, right? So you're on, there's no point, just give up right now. Whereas if there's a balanced business model, that means that your lifetime value is greater than the cost of getting those customers. And that's something that investors look at. You need to know unit economics, and even as you're modeling it from the beginning, that's one thing that I know that you guys are building into Canaree. It's going to help you model. I mean, no one's unit economics are good from day one, but it will help you model it in the future. There are other like rules of thumb there. So you want your LTV to CAC to be more than 3, and you want the payback for each customer. So the CAC payback is what they call it. You want that to be sort of less than within 12 months. So you want to get your money back within 12 months. Just little rules of thumb like that. But it's a really powerful thing. And the reason, like I said, so the reason that VCs look at that is it's a way to determine. So if you've got good unit economics, even though you're a loss-making company, a VC will look at that and say, okay, great. So at the top of the profit and loss statement, this company, if we scale it up, they will make even more money. It's like someone described it as a slot machine. You put a coin at the top, and then you get money out of the bottom. Right. So the unit economics will tell you, the LTV to CAC ratio will tell you the multiplication as it goes through. You put money in the top, how much is going to come out of the bottom. And so a VC knows if they've got good unit economics, even though they're losing money, if we invest in this company and scale it up, they will be a profitable company in the future.
It's really powerful, and it's had some interesting impacts on how we've thought about building the Canaree. For example, the Canaree team, like we're not expecting to have a huge sales force of people cold calling, because that wouldn't work with our unit economics, but we can grow our marketing aside and onboard customers on their own, and we can scale that much faster and much better in terms of unit economics, for example. So it's they are really powerful. What we've been discussing in our board is also there might be an older school that looks more at P&L and balance sheet, and will be asking questions along the lines of those type of numbers. How would you, I mean, I know we've been a bit, it's been difficult to try and align the two because they don't always, talk well together. So is there any advice on how to optimize your model for both? Or should you not even try that?
I mean, I'd say early stage for your first model or whatever. I'm not even sure there's a need for that. There are some complex models that we do where you don't even do a balance sheet. I mean, it's good form, it's good practice to do all 3 of them: cash flow statement, P&L, balance sheet. But often you don't even need it. You can but yes, you will always encounter people who are sticklers, and they want to have what they want to have. I think Canaree one day is going to help you put out all the different types of financial statements that you need. It's more of a communication education thing as well with older school investors who haven't been exposed to unit economics. I think you need to explain why. And like I said, so if you've got a good fundamental core of the business, if you make that investment, then it will eventually trickle down through through the P&L statement and turn you into a profitable company at some point.
Yeah, yeah. And that's exactly why we prioritize having unit economics in Canaree, not a balance sheet and P&L yet. I mean, it will come, but because all the conversations I've had with investors, they ask about CAC and LTV and CAC payback and things like that. I mean, at least our assumptions down the line, and they also know that it will change as we get better at making those assumptions. But that's the only conversations I really have about our finances, and of course, the size of the round and so on.
Yeah.
One of the other discussions we've had in our team or in our board and co-founders is, the assumptions change, and every time they change, we also update the model because it gets better and we refine it. Can you maybe talk about the process that we've been through in Canaree and how, we probably made some mistakes in also not being good enough at communicating that? Can you elaborate a little bit on that?
It does come back to being approximately right rather than precisely wrong, right? Yeah. So I think we were, I mean, you and I, so we were revisiting some of the core drivers of the revenue side of the model, and we made some fundamental changes about targeting different sectors. So we had ideas about it, so not just targeting startups, but we had some potential leads with partners or accelerators, and so we revised the modeling to include that, and then it hadn't occurred to us that it was. I mean, it's probably, I blame myself really. It didn't occur to me that was a big change. And so when we talked about it with the board, they were not happy. That they said, well, this is a big change and you didn't notify us about it. But in our minds, it was, we'd revisited one of the drivers of the model, and we'd simply change it. You need to take a step back sometimes. Remember, it's the story that you're telling investors and board members. And if some of the drivers of this or some of the outline elements of the story change, you've got to communicate that, and we didn't do it well enough.
No. Well, I think we not well enough, right? Because we did have a discussion about the assumptions changing, and we learned from the market what was possible and what was not possible, but we didn't really put the numbers in front of them, right?
Yeah.
Which is kind of building a finance tool. Yeah, but it was so, I mean, I love that we're building this product because I constantly say to the product team, like, I would really love to have this feature. And so now we're also building, the opportunity to export, and so I can just, print out a PDF and put that in front of my board members when I have a board meeting. And so we're constantly feeding in our own experiences and getting better, which is kind of interesting.
I mean, Canaree, ultimately, it's not just going to be for startups and early stage businesses. I mean, because you look at any large company, I mean, they've got to analyze different projects. You've got to know whether, okay, is this a good company for us to buy, or should I invest in this project? I mean, it's I was reading a case study of how Disney planned their expansion of into South America. And there's no difference. There's no difference in the way that someone goes about creating a model and then determining whether it's good value for money.
Yeah. And you don't have to be a finance genius to do that now. I mean, that's the whole point of Canaree, right? I mean, I had never thought I would build a financial product because, I mean, I don't have a finance background, and I think my math teacher thought I was trapped on the floor as a baby, but everything I know about finance is what I've learned by doing and sort of building a business and realizing how powerful it can be. But that doesn't mean I love numbers as such. But I think this will really empower not only entrepreneurs, I should say, but anyone who wants to make an investment or change their business model or explore something new in that regards can really be empowered in that way. And I think that's the exciting part.
Absolutely.
Yeah. So my last question is that a lot of, I guess it goes back to a little bit about communicating, but a lot of people right now, especially startups, are revising their models because of the crisis and are trying to find ways to extend the runway, cut costs, just it's more survival mode than growth mode is my take on the conversations that I'm part of. How would you go about presenting or communicating those changes in a model, either to your current investors and board or even potential investors as well?
Yeah, I mean, everyone's aware of what's going on in the market, right? it is, again, it comes back to assumptions. And I didn't mention before, but you don't need 100 assumptions in a model, right? 8, 10. That's really all you need to come up with something that you can discuss. And and if you've noticed that the growth rate of the economy is now what, -4%, those sorts of things obviously can have an impact on every business. And so, you can reflect that in your modeling, and then you can have a discussion about those new assumptions. And if you do tweak those assumptions in the model, then it will have an impact on your runway. And so then you can have another discussion about, okay, so the runway's been constrained by 3 months, so we need to make this and this change, or we can't launch in time. But again, it's a conversation. It's having the model with you, it's knowing what the assumptions are, and it's discussing it with the board or your potential investors.
Yeah. That's also what we've done. It was frustrating when everything sort of shut down, and we didn't know what was going to happen. But after a while, or after a few weeks, I guess, we sort of said, okay, well, this is now our plan, and now we actually have an opportunity to dive deep into making the product even better than we would have had time to before. And obviously we have really supportive investors on board that are helping us get to that point. And then, so saying that our fundraising have been pushed, but I think there's also an opportunity in that. And that's kind of what I've been communicating in my conversations. And I think that's been resounding, that's been taken well from the potential investors, at least.
Definitely.
Yeah. Is there anything else that you want to add, sort of from your genius financial model brain?
Don't butter me up.
So
I think coming back to approximately right is better than precisely wrong. That's the key. You need a model. Most people hate the idea of doing a model, but you need it. So you've got to figure out a way to do it. You can either do it by yourself in Excel, which is, unless you're a sadomasochist, no one particularly enjoys that, right? So, well, actually,
I think you get a little excited,
for most people, what you need is like someone to hold your hand while you do it, right? And that can either be a financial advisor that charges you a lot of money, or it could be something like a Canaree that will walk you through it, and it'll demystify how it is. And you know what? It's a skill that you'll take with you for the rest of your life. If you're an entrepreneur, you're not just do one business. You might do 5, you might do 10. So it's a skill for life.
I totally agree. I was talking to a young entrepreneur who's doing fundraising for the first time, and he just asked if I could give him some input, and I'm obviously always happy to help. And so I also asked if he had prepared his investor deck and his financial model, and he said, yeah, the deck is ready, but not the financial model. And for me now, sitting on this side and having worked with you, I can't even imagine how I would do a deck without having the financial model, because how do you know how much you're going to raise if you don't have a financial model? I mean, you can't just ask for a willy-nilly number, and someone is going to ask, what are you going to spend it on? So not to sort of throw him under the bus, but it's so clear that there's so much anxiousness about actually creating a model, and there shouldn't be. It's not dangerous. Good. Good. But I think we'll definitely do another webcast on unit economics, because there seems to be a lot of interest in that. But to anyone who's viewing, if you have any feedback on this setup, or any topics that you guys want us to discuss, then please let us know. We can also call in other people to host this. So just let us know. And thanks for watching. Thanks, Andre.
Thanks, Sara. Bye.
Bye.